Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by Maidsafe. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 24th of August, 2018. Today I'm flying solo, so let's get straight into it. Topic number one, the crypto roundup for the week. Well, we've got the usual suspects here: Bitcoin, Ethereum, Ripple, Bitcoin Cash, EOS at number 5, Stellar 6, Litecoin 7, Tether number 8, Cardano number 9, Monero number 10. It's not much change there, I believe. Let's have a look at the global charts here, the total market cap. Not on the right time frame here. Let's go to 7 days, log scale. Let's expand that out a bit. So what we got here, looks like we opened the week at about 218.3 billion, and we've ended the week today at about 215.7 billion. Not much change in the grand scheme of things, although we did have quite a bit of volatility. With looks like we had a low as far down as 203.7 billion. So, and I notice also the volumes for the week started out fairly normal and dropped quite precipitously toward the end, all the way down. Let's see, we started at about 15, 16 billion range, and we went down to as far down as 9.8 billion. So that's a pretty significant drop in volumes day to day across the week. Yeah, interesting stuff. I'm not sure what's going on there. Well, activity. Well, this week, EOS is maintaining its number one hold by a wide margin. I'm not sure why EOS is such a busy network, being that it's so new, but for whatever reason, it is on top. We got Steam at number 2, BitShares number 3, Ethereum number 4, Bitcoin number 5, Komodo 6, Ethereum Classic 7, Golos 8, Doge 9, Litecoin 10. Let's see here. The current Ethereum unconfirmed transactions stands at nearly 54,000. So, still maintaining a pretty high load week on week. See how that goes. Hopefully it doesn't keep going up and up and up. Not good for Ethereum. Hopefully they'll get some updates in there, and they'll have to have some pretty major updates. Well, our next topic is the Maidsafe update. I'm going to go a little more in depth this week. There's some interesting things happening. So, the highlights, roadmap, planning discussions have continued across the teams this week. Number 2, the RFC process is being streamlined and kickstarted. Number 3, the Safe Network London meetup is taking place next week, so coming right up. Number 4, the front-end team published an initial proposal on the development forum for supporting the use cases around file sharing with URLs. In other words, sharing files without the need of publishing them under a public name. And number 5, the Parsec milestone implementation is now ongoing for milestone 2, They've merged BART's pull request that uses the prop test framework for Parsec's integration tests. So marketing this week. Planning has continued this week around the roadmap, releases, and messaging. And as you might imagine, digging deeper has led us to building out a number of different strands of possible activity across each of the areas. This is part of the reason behind the newly announced search for resources in the form of a marketing strategist at headquarters. We've also been creating a video this week, which We run views through a graph visualization that will illustrate the parsec consensus mechanism. The video should be released over the next couple of days, and this visual approach is part of the broader push to raise the profile of certain safe network components, parsec, crust, etc., so that others outside the project can benefit from the hard work we've put in over the years. With all that's been going on recently, we've also identified that the use of the RFC process has tailed off in recent months. As a reminder, the RFC request for comments process is intended to provide a consistent way for managing how new feature requests are submitted, considered, and, if agreed, implemented across the project. At dgetties, that's a username in the forum, has picked up the work in this area over the past few days, and we will be sharing further details with you on this very shortly. Last call for any late signups for the Safe Network London meetup next Wednesday, the 29th of August. Doug Campbell and Pierre Chevalier, I may not be pronouncing his name right, will be giving an introduction to the Safe Network and diving into parsec in a little more depth. If you are planning to come along, please confirm by next Tuesday at the latest, so that we can let the venue have final numbers and, of course, bring the right amount of swag. Okay, there's further information here on the Safe API and apps, and Safe Client Libs, there's an update, and routing, there's an update, big update, and crust, there's an update. So there's a lot of information here. As usual, please come and read in detail. I'm going to go ahead and have a look, read over the marketing strategist job position they've got listed. If anybody out there has marketing knowledge and marketing skills, marketing experience, please have a look at this. I'll put a link to this in the show notes as well. So Maidsafe is now looking for a marketing strategist. Just going to read through. This is an exciting yet demanding role based at Maidsafe Scottish headquarters, working within the global technology sector. This is a brand new role created to join our marketing team and is well suited to individuals passionate and knowledgeable about autonomous networks, blockchain, distributed computing, decentralization, and cryptocurrencies. So they list out their roles and responsibilities, essential requirements, and preferable but not essential skills, know-how. So if you've got some marketing background or you know someone who does, please let them know about this. It could be a really exciting job. Okay, topic number 3, the news for the week. See, this is a bit of a follow-up. I did a show a few weeks back about how different groups, banks in particular, were patenting a lot of blockchain-related stuff. And here's a new patent from Bank of America. Bank of America, what I learned from the last time I did this research, Bank of America has the most patents, I think, of any group currently, and they've now applied for a new one for a blockchain-based encrypted crypto storage system. So the United States' second largest bank, Bank of America, has applied for another blockchain patent on the development of a secure crypto storage system, according to a patent document published by the U.S. Patent and Trademarks Office on August 23rd. The patent, entitled Blockchain Encryption Tags, describes a system of recording and storing cryptocurrency-related transactions that are handled by enterprises. In short, the invention offers a system of data security for blockchain networks by implementing encryption and linking data units to the blocks of a certain blockchain. In the patent document filed on April 18, 2018, the North Carolina-based bank introduced a system that includes a device with a processor that first receives a set of data elements and then acquires an encryption key prior to encrypting the elements within the first block on a blockchain. I'm not going to go into all the details here, but suffice to say they are continuing their I'm not going to say trolling, but they're gathering more patents. Whether they actually use these patents in the end, I don't know. But they could use them defensively. They could just use them to block and keep people out, or they could use them to help develop products. But well, we'll see what happens there. Hopefully, it won't get in the way of too many other people trying to develop technology in the blockchain sector. Our next article. In the United States, 4 crypto exchanges are establishing self-regulatory association for digital commodities industry. Crypto exchanges Gemini, Bitstamp, Bittrex, and Bitflyer in the USA have announced the creation of a self-regulatory organization for digital commodities such as cryptocurrencies. Business Insider reports on August 20th. The new group, dubbed Virtual Commodity Association Working Group, wow, long names, huh? Aims to help large-scale investors get more comfortable with the crypto market, work on formulating industry standards, and, quote, be a precursor to the formation of a self-regulatory organization for digital commodities like Bitcoin and Ethereum. The first meeting of the newly created association is set to take place in September this year. Business Insider quotes its source as explaining the kinds of problems the group wants to solve. Quote, in equities, securities exchanges have their own organization to come up with common standards and jointly respond to declarations by regulators. The new group could serve as the equivalent for the crypto world by coming up with best practices for the industry, looking at ways to boost liquidity and stamping out market manipulation. So that sounds pretty good. We'll see what happens. I'm all for self-regulation. That's good. Any way they can keep the government out and also help support the industry in general is great news. So I think that's really good. Our next news article, Metlife subsidiary Lumen Labs pilots blockchain insurance system for diabetes. Now, I really think that blockchain could be really great for insurance. I'm really keen on that. I think that's could be one of its real fundamental strong use cases. And Metlife is a really big insurance company, and so they're working on that. And I think this is awesome. Singapore-based digital innovation center Lumen Lab is testing a blockchain-enabled insurance solution for diabetes sufferers, according to a press release published August 20th. Lumen Lab is a subsidiary of financial services provider Metlife and has reportedly developed the new project within the Monetary Authority of Singapore's regulatory sandbox. The pilot, dubbed Vitana, is a parametric automated insurance product targeting those who develop gestational diabetes, a condition that is said to affect 1 in 5 pregnant women in Singapore. It has been so developed with insurance firm Swiss Re, UK tech and blockchain specialist Cognizant, and electronic medical records EMR provider Vault Dragon. The blockchain solution has been designed to securely integrate EMR data in order to trigger an automatic payout upon diagnosis, effectively removing the need for manual policy claims. See, that's awesome. That would be really awesome. Could really help a lot of people. As Ledger Insights outlined following Lumen Labs' demo of Vitana at Consensus earlier this year, the bulk of electronic health records in Singapore are tied up in manual, centralized data silos. Singapore residents who have coverage are first required to personally pay for their treatment and only later claim it back from their insurer. In the new system, Vault Dragon will securely provide EMR data to confirm or refute the diagnosis. In the case of a confirmation, a smart contract will send the customer's encrypted bank account details to the insurer, prompting an automated payout. No additional patient data will be aggregated or stored on Metlife servers. So hypothetically, we've got more privacy, more segregation of data so that it's not all in one place where it can be hacked and all that too. So it's another benefit. As a Cointelegraph analysis highlighted this spring, blockchain technology has been gaining increasing traction in the global healthcare industry to innovate data sharing, security, and insurance systems. In April, German Camelot Consulting Group launched its own blockchain-based solution for the management of sensitive medical data, arguing that existing healthcare systems transfer sensitive patient data by analog means, running an immensely high risk of error and misuse. So this is great. I also want to point out that when Maidsafe launches the Safe Network, it will be, I mean, you don't need a blockchain necessarily to do this. What you need is a system that is inherently secure. And Maidsafe SafeNet is just that, and it will provide a lot of possibilities for doing this sort of thing without even using a blockchain. But this is really great, and I like to see this kind of development happen. Could be really good for contracts and payouts and things. All kinds of good things could come out of this kind of technology, I think. Our next article, Liechtenstein Bank issues its own crypto stablecoin, aims to become a blockchain investment bank. So Liechtenstein Bank Union Bank AG, this is a real bank, a real existing bank, not just a proposed thing, announced it was issuing its own security tokens and in-house cryptocurrency backed by fiat in a press release Friday, August 17th. Union Bank, which has concentrated increasingly on blockchain this year, said issuing its so-called Union Bank Payment Coin, UBPC, was a further step towards becoming a full-service blockchain investment bank. UBPC will act as a stablecoin, the institution explained, and will have fiat currencies such as the Swiss franc as its backing. So I'm not clear if it's just going to be the Swiss franc or if it's going to have a basket of currencies. I'd like to see a basket of currencies, or really I'd like to see more of a basket of commodities backing a stablecoin. But in any case, it's interesting to see what's going on here. Our goal is to become the world's first blockchain investment bank and to provide tangible solutions which will help drive efficiencies, reduce cost base, and open up new revenue opportunities for our new customers and intermediaries alike. Chairman of the Board of Directors Mohammed Hans Dashtmalchi commented in the release. So, quote, as such, our fiat-backed Union Bank payment coin has the potential to disrupt the approach to international trade and international cross-border transactions. Well, yes, so does all crypto, but in any case, it's still interesting. The news came the same week that major cryptocurrency exchange Binance launched a fiat cryptocurrency exchange in the tiny European principality, catering to both Swiss francs and euros. Both Binance and Union Bank praised the jurisdiction's pro-blockchain stance, indicating a desire to see functionality increase in time. In partnership with Swiss blockchain advisory Verum Capital, Union Bank said it was now looking to introduce blockchain throughout its processes and supporting technology. So here we go, folks. The banks are slowly creeping in where the jurisdictions are allowing them to into the blockchain space. Not just new banks that have been initiated by people who are already in crypto or big crypto companies like Binance, but actually existing banks starting to creep in. I think that's great news. Now, our next topic is our discussion, and this week we are going to have a look at what Andreas Antonopoulos has said about Bitcoin ETFs. He came out this week on different places, I guess. I'm not sure, maybe on Twitter, and says that, well, I'll just read it here. Announcing this week he intended to burst the ecosystem's bubble because of Lambos and to the moon and all that. One of the most respected thought leaders in cryptocurrency, Andreas M. Antonopoulos, revealed he believes Bitcoin exchange-traded funds, ETFs, are a terrible idea. The author of The Internet of Money and the seminal Mastering Bitcoin does think Bitcoin ETFs are coming, but he also suggests Bitcoin ETFs mean a kind of financialization that runs directly counter to the entire point of Bitcoin, specifically in cryptocurrency generally. Quote, I'm actually against ETFs, Andreas Antonopoulos remarked during his brief video Bitcoin Q&A, Why I'm Against ETFs. For mainstreaming enthusiasts, those who hope to get more Bitcoin core adoption, the exchange-traded fund holds almost mystical appeal. The ETF is also thought to be key in the next immediate price run-up. For retail investors of the traditional variety, ETFs present a nice way to hedge against risk without the bother of housing the commodity. ETFs are, then, custodial arrangements, repackaged. A fund is created and shares of the fund are sold. It has been a clever way to invest for many retail users. Proposals for a Bitcoin variation would essentially involve something similar. It will have a manager who will offer a fund of Bitcoin, which will be sold like shares, stocks, essentially a reserve. Shares will be sold as they might traditionally through a standard brokerage account. It's a custodial reserve system where investors do not actually hold Bitcoin. And therein lies the rub. Excitement over ETFs in the Bitcoin community stems from the impact they had on gold prices a few years ago. A few years ago, folks. ETFs nowadays, I kind of got to wonder if they're actually used to contain the price of gold. That's just my little opinion, but initially, yes, they did cause a run-up. So, I go back to the article here. Sorry, I keep interrupting with my little spurious comments. Essentially, the price of gold languished for well over a decade. Once introduced as an ETF, the price took off. This prospect for Bitcoiners has only become more enticing as the crypto bear market deepens. Mr. Antonopoulos' first concern is over the nature of price manipulation and the ETF itself. Whatever commodity trading within the ETF scheme is subject to worldwide price swings by larger market makers. He believes should Bitcoin become part of that genre, the same, maybe worse, will follow for its price. He realizes he is going to burst a lot of bubbles by saying so, but Mr. Antonopoulos believes Bitcoin ETFs are a terrible idea. The top reason why, he explains, is the arrangement. A Bitcoin ETF is going to be a very large custodial holder of Bitcoin. Though shareholders will own slices of the Bitcoin ETF, they are not in ownership of Bitcoin proper, he explains. In order for that to be the case, a person is said to be an owner of Bitcoin if they have the private keys. Essentially, he who holds the keys holds the Bitcoin, owns the Bitcoin. Holding Bitcoin proper allows all sorts of flexibility in practical terms. If a holder wishes to exchange Bitcoin on a formal exchange, he or she can. If he or she wishes to pick up forked coins, they can, and so on. Mr. Antonopoulos believes an ETF would change a fundamental dynamic of Bitcoin, the ability to, quote, vote as an owner by making the above decisions. Instead, and though the ETF would have many customers, it is solely the Bitcoin ETF that will make the decision about forked coins and so forth. A vital feedback mechanism might be lost. So essentially, the managers of the ETF are the ones holding the Bitcoin, and they can decide how they're going to, they're going to basically hold a lot of influence. So it is a form of centralization. That's what he's getting at here. It's going to be a major point of centralization in Bitcoin. So he goes on. He references the August 1st fork of last year, the one from which Bitcoin Cash extends. Now, I'll get into that later. During that time, the ecosystem had to wait to hear from exchanges on their terms, how or even if they would accept the fork. Those with Bitcoin parked on an exchange had no say. They were at the whim of the exchanges who actually held the coin. This phenomenon would be exacerbated with ETFs in the space. A future fork would have the same problems. Could be greatly exacerbated. I can see an ETF, once it gets listed, could really take over and end up holding a huge proportion of Bitcoin. Another problem is centralization. The fund manager now becomes the gatekeeper, a centralized office through which governance can be impacted disproportionately. Assuring this won't be, quote, the end of Bitcoin, Mr. Antonopoulos does warn it will cause price manipulation and manipulation of debates regarding how Bitcoin functions in the future. He believes also that with the inevitability of another fork, Bitcoin ETF-related companies could very well break off themselves and form what he calls a corpo coin, a corporate version of Bitcoin. Beyond that, stifling the majority of Bitcoiners' will, their voice is something he is particularly concerned about. He gives the example of beefing up security and privacy on the Bitcoin blockchain. If developers, for example, have found a way to upgrade the system to make it more privacy-oriented, perhaps the heavy financial backers of that ETF fund would work to make sure it never came about, so as to not rile their friends in government. Mr. Antonopoulos ended on what he worries will be a reality of Bitcoin ETF enthusiasts, second-tiered voices. Because they do not hold their keys, any whim of the backers versus that of the consuming public will always side with the institutional investors in most cases, locking out that segment of Bitcoiners. So I have to agree. I think he's onto something here. And the idea of an ETF has been very exciting because we realize that if the average person in the stock market can now buy into Bitcoin quite easily just by pointing some of their portfolio at this ETF, then that could radically increase the price of Bitcoin. But the end result here might be that the institutions gain a lot more power over the direction of the Bitcoin software. And that would, of course, be bad, I guess, in the end for Bitcoin holders. Bitcoin itself is a pretty transparent blockchain, hypothetically. Once the computing power is there to trace back who owns what through the blockchain and through IP addresses and all of that, I don't know if that technology actually exists at the level it would need to be able to successfully do that. But technically, all the data is there, and it could be done. So in the future, if it's not already. So, given that fact, how bad of a thing is this? We could see the institutional investors. We could see big banks start to buy into this and then manipulate Bitcoin software over the next decade to where it's ineffective as a currency anymore, which might support, their ultimate aims and agenda. I don't know, but there's some things to think about here. And at the end of the day, it doesn't really matter because it seems like ETFs are inevitable. They are going to come. The SEC, well, it's put the nix on, I think, up to 9 different ETF proposals over the past few months. They've just come back and they're going to be reviewing those pretty soon. They've successfully appealed for some kind of review. So there's like a board, and then there's the people who work for the board, and the people who work for the board have basically failed these ETF proposals. But the board members, some of the board members have voted and said, we want to review all these. Probably there's a lot of politics involved there, but whether or not the reviews pan out, and in favor of ETFs or not, we don't know. But well, it's interesting to see. I think eventually it's going to come to the point where there are going to be ETFs, and we're going to see some things happen here, and could be good initially, could be bad long term. I suspect personally that this is what happened with gold. The gold ETFs came in, and people came in and bought it, thought that's great, and the price rose up dramatically. And ever since then, in percentage-wise, it rose up dramatically. And ever since then, percentage-wise, it's hovered up and down. It's been quite volatile, but it really hasn't reached, the same kind of percent and held the same kind of percentage highs that initially did. And there's a lot of people in the gold sector who believe that these ETFs, these paper gold, that it's not actually backed. They think that it's basically fake, that they're not actually holding custody. And I mean, I think that would be harder to do with Bitcoin because you can look on the blockchain and you can see what address holds what. So I don't know that they could play quite the same funny game they do with gold, if they play that game with gold. But some people say they do. But there's a lot of things here. Even if they can't do that kind of manipulation with Bitcoin, they can still use political influence that they will wield by just holding the custody of so many Bitcoin. So it's very interesting, and we will see what happens there one way or another. Okay, I want to lastly have a bit of a correction, because last week when I was talking about Bitcoin and Bitcoin Cash, I stated that at the time that Bitcoin Cash and Bitcoin had gone through hard forks, and that was erroneous. I don't know why I said that. I knew better. At one point, I knew better. I think I had just forgotten what I knew. Got too much stuff in my brain, and I'm losing brain cells daily. I'm over 50 now, so it's the end result of that. So Bitcoin Cash did undergo a hard fork because they increased their block size, and in so doing, that forced all the people who wanted to use Bitcoin Cash, it forced them to adopt the new software. There was no backward compatibility, and so that basically meant it was a hard fork. Where Bitcoin adopted SegWit, segregated witness, and that was still backward compatible with the old software, so it was a soft fork. Now, they later came about and wanted to do SegWit 2x, where they were going to double the block size from 1 megabyte to 2 megabytes, and that would have been a hard fork, but it wasn't adopted. So currently, Bitcoin is still technically backward compatible and hasn't hard forked. So I just want to apologize to any confusion about that. Hopefully that's cleared up now. If you do have any questions about any of that, I'll happily try to address them as best I can in the comments. And again, if you've got any other questions, please hit me up in the comments. Okay, that's all I have for today, folks. I'd like to thank all our viewers for joining the show. I hope you found the episode informative and helpful as usual. Please subscribe, like, comment, and share a video with others. And tune in next week for another interesting episode. Bye-bye.